Afternoon all. How are we all doing? Ooh, where's my chat gone? Afternoon, Robert, JC, Amy, Christian, Danny, Brian, hey, Virginia, J3, GM0194. Can't even make a word out of that one. Afternoon, Fletch, Day Trader FX, David, Ciao, AZ, afternoon, Andrew. Right, still in the DAX. This has gone nowhere today at all. So couldn't get, just a mess today. Look at it. I mean, it's literally not gone anywhere all day. So total rotation day today. Kind of what I said this morning, I was sort of expecting because of the rates, this CPI figures coming out tomorrow for the euro. So we opened up there, did the gap fill, broke the high. I got long, pushed down, back into double bottom, back up. We're back up to where I was. I've turned the EA off because otherwise it was just going to close me out here, and I'm going to hold out hope that the Open of New York is going to be bullish. So I'm willing to take a loss on it. 15,231. And yeah, if it breaks down, I'll get out with a loss. If it doesn't, I'll get out with a profit. Simple. But I'm basically exactly where I was when I got in. So yeah, not really gone anywhere. So we'll see what happens with the DAX, but we'll have to wait and see if we get a break. Morning, Marco. Afternoon, even. Hamza, Tom. So this morning, we've had no news today. We had the Aussie news obviously this morning, but that didn't do a lot. There's no other news today. We've had the core durable goods for the US. Bullish numbers again. The only news we've got today, and this could be big news, is we've got Jordan speaking later at 5:45. So the Swiss franc at the moment is going through a bit of a downturn because of the interest rates that they froze instead of increasing, which was what the market had factored in. So obviously we had a big dump because the market had factored in a 2% rate. They gave us a 1.75, so they had to dump the orders. So we may find that Jordan comes out and says, not quite sure what you're doing. We definitely haven't finished increasing interest rates. We just decided to pause for the moment because we expect our CPI to go up. And then the market will rally the Swiss franc and everything will reverse. That's what we're hoping for. But apart from that, there's no other news. Aussie dollar retail tomorrow morning, and then we've got the Euro CPI tomorrow. So it's CPI and unemployment for the US tomorrow. So we've got some decent news coming through that might spike the market. This morning, we've had some ECB news. We've had a little bit of pound news. ECB rates haven't necessarily peaked. Thanks for that. We kind of know that. It's what you keep telling us, and then you don't do it. Kashida's just said something as well this morning. Didn't see that. That's nothing to do with FX. Bank of England intend to push blah, blah, blah. There's nothing exciting out of that. We've had Kashkari come out as well and say there is a risk interest rates might have to go higher. So that's in response to the inflation figure ticking up. So obviously this has gone down lovely, and now all of a sudden it's ticking back up again. So if it continues to tick up next quarterly figures, that will need to go up higher, which will be bullish US dollar. So hope for a CPI drop if you've got anything on the US dollar at the moment. Apart from that, there wasn't a lot of other news. We've had a little bit more coming out. They're going to hold rates into next year, which we kind of know. They've said that for months. But that's about it. Then a bit of news out of Russia. So nothing exciting news-wise today. Not really. Nothing we don't know. Oil has hit ADR again. So we had an ADR hit yesterday, and now we've got a second ADR hit. So 2 ADR hits in a row. So big push again. We're coming back up into this area at the highs. We've broken out of this area that we were holding at for the last sort of 4 or 5 days. So oil's gone without me. Again, I was waiting for a pullback, didn't get it. So annoying. This is kind of what we were alluding to this morning. We were talking in Telegram about trend trading. Yeah. You know, it's impossible, and this is why trend trading is so difficult. When you're trying to get into a trend, you're always trying to get in on a pullback. That's the whole point. You're getting in as the market comes down so that you can take advantage of the next leg up. But in a trend like this beautiful trend we've had that started there and is still going now, where do you get in? You can pick any fib retracement you like. It won't be right. You can pick the 24 moving average if you want, and it probably won't be right. You'd need the 72. But if you pick the 72 and it doesn't quite get there, you miss the entry. If you pick the 24 and you don't quite get there, you miss the entry. I was waiting for a 38 retracement. It got a 23 and it went. Problem with trend trading, isn't it? That you can't pick it. There is never a pullback that is the same as the previous pullback. And there's never a pullback to a level which is consistent. You just have to get in, wait. And if you're wrong, scale into it. If it turns into, oh, it's not a trend anymore, you're stuffed. So, you know, we've been talking about it this morning quite a lot in the Telegram group, and in this morning I was talking about it in the live room as well. The problem with trend trading is by the time you've identified a trend, that trend is pretty much done. And you either get into an accumulation where you get stuck and you can't get in or out of the trade, or you get in just as it's starting to come back the other way, in which case then you just get chopped to pieces, which is why the vast majority of people that are trend trading find it very hard to make money. But yeah, I've been looking for buys on it, but I wasn't willing to buy off the 23 retracement because it's the most least common retracement in a trend. The 38, 50, and 61.8 is the most common. The 23 is a shallow pullback, which doesn't happen very often. That's what we got. We got a 38 there. That was the entry. I said, that's probably it. It was. Yeah, 50% right. Always going to get one wrong, always going to get one right. It's always the way it works. It's 50-50, isn't it? But anyway, so that's rallying again. So you want to wait for pullbacks on that. What's that noise? Weird noise just came out of my computer. Anyway, market is open. Sorry, we're waffling on. So pre-markets short on the Dow. Blimey, look at the Dow go. No break on the NASDAQ or the S&P so far. DAX is obviously not moving particularly fast because it's the US session, but bullish. So big candle before the open there. A lot of volume, a lot of volatility coming through. What range do you take on opening range? Does it change depending on the size? So the range, the typical range, the ranges for the opening range breakout EA. I mean, you can use any range you want, really. But the ranges that I tested are the pre-market 5 and the pre-market 15, if you're going to take pre-market ranges. The safest to take is the 5-minute opening range, which is the first initial candle at the open, which is a cash balance candle. So normally what you get here is a lot of volume coming through, but this is just orders being executed. So you don't know whether or not these are orders which are going to turn into speculative moves or whether they're just orders being executed because they got to get them executed. So once that initial 5 minutes is in, and some people use the first 15 minutes, you basically take a break of that level. That's the safest. But the pre-market, this is not a good pre-market today because it's so big. But the pre-market range, let's say that was a pre-market range, is very profitable because that initial cash balance candle can be massive. And if it's massive, that's your profit. Yeah. But it can also be very whippy, in which case then it's a double-ended stop out or a hedge. There is no right or wrong. I've tested thousands of system parameter permutations around the times and around the offsets and around the targets from them. They all work, but you don't know each day which one is the one you needed to take until it's done it. We knew we'd already just take that one, wouldn't we? But every day is different, so there isn't a right. Okay, I am long on the NASDAQ. Look at that candle on the NASDAQ. This is a whippy open. There's your 5 minute on the NAS. That's huge. And on the Dow, very volatile open. No triggers on the S&P yet. But NASDAQ, you'll be long. You may have even got triggered short on that, depending on if you took the pre-market, that is, depending on where your offset was. DAX is stuck. Dow break is still going short, so a lot of volume come in there. Okay, we've got a minute left. We'll watch what happens on these candles. 150 ADR on the CAD Swiss looks like a nice position for an aggressive with a stop above 200. Euro CAD has just hit its monthly range. Collapsing. Canadian dollar rallying off of oil, look. So this is oil again. Yeah. If you want a proof that oil and the Canadian dollar are related, there it is. Oil rally, CAD rally. Oil drop, CAD drop. CAD Swiss, yeah. So so this is the monthly high. Remember, I said this isn't a great monthly high because it's just happens to be the high of the month where we dropped for the entire month. Yeah. So anywhere up here is really resistance. You've got a little level there, you've got that high there, but this is the main resistance, which is where I've drawn this line. So that is 150 ADR, as AZ has just rightly pointed out. So if we can get a push up to 150 ADR today, and you can get an aggressive position up here, that's a really good level because we're going to find limit order triggers at these highs. I'd find it very surprising if we did not find limit orders sitting here. It's a very, very strong resistance level, look. Yeah. So we initially broke down, we accumulated, and then we broke through it, tapped into it, tried to get it through it again. Tried again, tried again, tried again, tried again. Yeah, very, very, very strong resistance coming up. Yeah, it's not going to be exact. Yeah, could be there, could be there, could be there, could be there, could be there. So if you're going to get in and give yourself room because you never know, the next attempt at this level could be there. Yeah, and if you put your stop there, you're just asking for trouble. So just be careful. Weekly range is hit on oil. Off we go again, Mr. Oil. Okay. So the Dow Jones downside break is on. So if you're taking the 5-minute ORB today on the Dow, you are short, or you're just about short, pretty much short now. The 5-minute ORB on the other instruments, so we've got an inside bar pretty much on the S&P. This market looks like it wants to go short. I'm going to get out of this DAX. Just take the loss on it. Okay. Dow's going short. The reason I'm getting out of the DAX is because this lot's all looking like it's heavy, so it's unlikely the DAX is going to push. So, oh, I got an email today, by the way. Where did I put it? There. From I don't know, some company selling an indicator for MT4, MT5. Look what they're selling. A footprint chart for MetaTrader. What do footprint charts work on? You know, those useless retail candlesticks. These show you the numbers within the useless retail candlesticks. What are those numbers? Volume. What do you not have in Forex or on any CFD platform? Volume. It's broker volume. There is no centralized volume. So they're selling a useless footprint chart for your broker's volume placed by retail traders who don't know what they're doing. Good indicator. I don't know what it costs, but it just made me laugh. It's like people developing products for a platform that doesn't have a centralized volume that relies on volume. Anywho. Right. While we're waiting for that market to wake up. Pound US dollar during the last weeks, very few pullbacks. Yeah. So it's scalping or nothing. What do you mean scalping or nothing, Virginia? You're talking about trend trading? No, if you're talking about trend trading, no. I mean, there's nothing wrong with mean reversion trading or breakout trading. Because trend trading's hard. The window cleaner. What? Oh, the noise. No, it wasn't the window cleaner. That noise was coming from the computer. It's like a squeaking noise. Almost as if I've got a bug. Or something. I don't know. It's just a weird noise. It's gone now anyway. Don't worry about it. Afternoon, Peter. Afternoon, Crom. Right, so ADRs today. Yes, trend trading. Yeah. So there's only 3 types of trend trading, as I said before. Mean reversion, which also works in trends. Breakout trading, and trend trading. So you don't have to. It's nothing to do with scalping. Scalping, as a definition, is entering and exiting the market quickly. So you can scalp on any time frame. You can scalp on the daily time frame. Yeah. So if you get a daily candle that looks like that, right, and if you want to scalp that candle, place a buy order and a sell order there, right? And the next day, if it moves above that level, close that trade out. It's a scalp. Yeah, you're scalping the daily time frame. You can scalp on M5, M1, M15, hourly, 4 hourly, daily, weekly. Scalp is just in and out quickly. Taking a scalp. If you've watched Yellowstone, you'll see them taking some scalps. But basically, that's all scalping is. So trend trading is holding a position for a long period of time in one direction. And trend trading, you're going for a large R return. That's the point of trend trading. Is you'll never find a trend trading strategy that doesn't work off anything less than 3 to 1 R. Why? Because they get stopped out 70% of the time. So you need a 3 to 1 R to actually make money as a trend trader, because you will be stopped out a lot. Because what you're trying to do is take a breakout and continue that breakout. You can take a breakout, make money, and then it can come back in. So breakout trading, you can be in and out and it not turn into a trend and make money. Mean reversion, you can make money all the time because the market goes up and down constantly. Trend trading, you've got to get in and hope that you get a higher low and a higher high, and then a higher low and a higher high, really, to actually make any money. So you need 3 legs at least to actually make any money, because typically your stop will be below there. You will have identified a trend here. So to get your risk reward, it's got to be up here somewhere. So you're relying on the market literally going like that. Can't scalp a trend. Although some people are now going to say, well, on the 5-minute chart, you could scalp a trend. Yeah, you could be in and out and in and out and in and out on a trend, but you're not trend trading there. You're holding on. You're not holding on to a trade. You're just scalping. Market structure. Anyway, there's millions of definitions of it. Everybody thinks something different, which is why everybody's right and everybody's wrong. Dow just about to hit target, 2R to the downside on the range break. So looking at the Dow today, pre-market and the 5-minute opening range all obviously going well. Downside risks today, we tapped into that low. There is my 1-hour chart. So we tapped into that monthly low, which we've bounced off, and we seem to be slamming through it at a rate of knots. So watch yesterday's low, which is coming up here. Yeah, so watch this yesterday's low for potentially a double bottom bounce. We're going to have limit orders at this low, especially after a 4 to 5 day drop. There's going to be people wanting to buy this up. And as soon as they start to buy this up, everybody that's short on it will start to get out of those positions. So just watch this for a bounce today. Got 2 minutes left on this candle. Glad I got out of the DAX. Just waiting for it not to hit my target and bounce away. So I just want to watch the price action on this. So watching this yesterday's low here. Obviously, sellers could step in anywhere around this area. It's not going to be on the line. It's going to be in this area. So I'm just watching price action because I don't want to lose the profit if it is going to go from here. We're basically every tick down is being pushed back. Look, 1 minute left. Wait for the candle to close. Going down for a week. Yeah. Yeah, Dow's been down for a week. So we've got big drop on our hands here. So, I mean, it kind of started there. Then we pushed up and then made a new lower high there. So down day wise, we've got 1, 2, 3, 4, 5, 6 days in a row. Very, very due a pullback, isn't it? Closing that position, breaking even on the second. Don't like that. Quite possibly we will get this propulsion gap hit and push back down, or we'll just basically come straight down. This is initial profit take and then we'll dump. But we're not chancing that. Not after what happened with the DAX this morning. So just banking some on that, and then we'll see if the rest of it goes. Jesus, look at the NASDAQ. I'm closing my shorts on the S&P. Speed that NASDAQ's going. I want to go long. I don't want to be short. Might be the wrong thing to do here, but oh, they're buy stops. So I'm not long yet, am I? Okay. That might have been the wrong decision there. Taking a small loss on that S&P. That was a big run to the upside. There's a lot of volume coming in today, a lot of volatility. This could fly either way. That short is going to cover that loss anyway, so see where it goes. But didn't like the way the speed that was moving up that NASDAQ. Looks like it was going to fly, didn't it? We'll see. Right. Come back to that in a sec. So oil we've looked at. The other ADR we've got today. So we've got an ADR on oil. So you've got potential reversal alert here on oil. Looking for short off of that ADR level. And US dollar Swiss, which we know has been rallying like a crazy thing. We've had a pullback already off of ADR on the US dollar Swiss. So the structure's shifted back down. So we're looking for basically a continuation to the downside on this. Obviously, we've got Jordan speaking later, so there may be some Swiss franc strength. Obviously, there is the opposite, that they could turn around and actually come out bearish on the Swiss franc. Highly unlikely. The Swiss economy runs on banking. It's not the sort of thing they want to be doing, seeing their currency devalued. So I doubt very much we'll get any bearish comments coming out, but you never know. So those are your ADRs. Weekly ranges hit on both of those as well. So US dollar Swiss, where are we? Wednesday. So there's your weekly range hit. 14.23 to the upside. Weekly range on it is 140. So we've done 140 pips already. That's the normal weekly range. But bear in mind, we are working on contracted ADRs at the moment, or contracted weekly ranges. So if this is the market volatility starting to pick up and get back to normal, we will see bigger than normal ADRs and weekly range hits, because if we get back to normal daily volatility we usually experience pre-August, these numbers are going to pick up, which means these numbers are going to pick up. So it could go further. But as someone's pointed out in Telegram today, and I put a chart in Telegram, might even have it actually still. This is the US dollar Swiss. And basically, if you look at the US dollar Swiss on the daily, what I was pointing out is where we are with the RSI at the moment being well above that 80 level on the daily. If you look at the last instances we've been there in the last sort of 8 years, it's rare that we get above the 80 level. I mean, it's a real stretch for the market to get above the 80 level. This is every instance that we've hit that level. Yeah, and this is the reaction we've had every time we've hit it. Yeah, this is where we are right now. So this is massively extended, multiple days screaming to the upside basically on this. If you look at the downsides as well, you just about see that one there. There's an RSI hit below the 20 level, which is this peak here, screamed up. That's the last one there, screamed up. We had a kind of little hit there, shot up, another hit there, shot up, another hit there, shot up, another hit there, shot up. Yeah, RSI on the daily above the 80, below the 20, hideously reliable, unfathomably rare. Yeah, so looking at this chart here, you're looking at in 8 years or 7 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 signals. So you're going to get roughly one opportunity a year. Yeah, this is the sort of thing investors are looking at and using. These sorts of levels. It doesn't fail, but it's not something you're going to be able to pay your mortgage with, because you're only going to get one trade a year if you're lucky, maybe two. But that's where we are. Yeah, so very, very, very good sell opportunity on this US dollar Swiss now. Very high. And we would expect one of two things to happen. You've heard me say it many times before, the climbing up the stairs and falling down the elevator shaft scenario. Yeah. What have we been doing? Climbing up those stairs. What are we waiting for? The Fed. Some come out and say, do you know what? We're going to reduce interest rates. Boom. Off we go. Bye-bye. Or just the market to go, we've had enough. We can't get any more. No one's willing to sell to us anymore. Off we go. We'll start making our money. We're going to get a big day start. So as soon as that move starts, for God's sake, hold it. Don't get out. Hold it. Yeah, you're going to get a nice drop on it. So very, very extended US dollar Swiss. We're just waiting for that catalyst to come in. So those are your ADRs today and your weekly range hits. Let me just go back to the FX. Okay, so we're 20 minutes sideways now. It is more bullish than bearish, though, I would have to say. Now undecided. Very difficult. Not really any direction at the moment. So, but it does look more bullish based on the fact that the NASDAQ is holding its own at the moment. The S&P, we've got a good attempt to go short by the sellers there. Buyers straight back into it, sellers straight back into it, but the sellers couldn't make a new low and the buyers were able to make a new high. Yeah, so looking at this S&P, read the market structure. Yeah, sellers pushed us down. Yeah, buyers retaliated. Sellers came back, but could not beat that low, and buyers could beat the high. So we've got more upside momentum than downside at the moment. But as I say, every candlestick is different depending on how many buyers and sellers are here in this 5 minutes. you're going to get a totally different result. Every candle is unique. Every candle is going to go the way the buyers or sellers are weighted in that candlestick. RSIs, obviously US dollar Swiss, we don't need to look at. 4 hour off the charts, above the 80 level. Again, go back on the 80 levels on the 4 hour. Yeah, when we get above that 80 level on the 4 hour, it's rare that we don't get a very strong pullback. Didn't quite get to it there, but same thing happened, obviously. So, yeah, just waiting. So that's a nice big 4 hour extension. The 80 level on the 4 hour is the ultimate, the much better level to get into on the 4 hour, but you're not going to get many opportunities. So someone actually contacted me, and this is something you can go and back test. If you've got the market reversal alerts here, you can go and back test this yourself. But if you just take 80-20 extensions in on the 4 hour charts, yeah, and you get in with a much higher risk, yeah. So rather than getting in as we do with 0.25%, yeah, get in with a big risk on it. But wait and space your entries at least 3/4 to 1 ADR apart when you get to these levels. You will find that with a big risk, you won't get into more than 3, maybe 4 positions at most on any H4 RSI extension before you get that massive drop down. And your target on them, you can try different targets on this, but start targeting 1 ADR, 2 ADR, 3 ADR. You'll be surprised, because a lot of the time, these moves, because they've been pushing so hard and grinding so hard, the staircase, we get that elevator shaft. And that elevator shaft is a 3 ADR move quite often. Sometimes not as much, but can be more, obviously. But you're not going to get many entries. Yeah, so you're looking at maybe 1 or 2 a month if you're lucky. So very, very few entries, but much higher probability of getting in and out very quickly, but and getting in and out with 1 or 2 entries. But obviously, if you want to pay the mortgage with them, you're going to have to get in much bigger, higher risk, which is obviously the scary part. So you are going to experience higher drawdown in squeezes on them. But they're few and far between. But anyway, I have tested it, and it is what it is. But you don't get in very often. So yeah, so we're nicely extended on that one. US dollar yen. We looked at this one again for intervention. I'm surprised we haven't had a peep out of the Japanese today. So yesterday, when we pushed on the yen, we had forgotten his name. It's not Suzuki. Who was it? Yeah, it was Suzuki. Sorry, it was Suzuki. We had Suzuki get out of bed and say, we're closely monitoring Forex moves with a great sense of urgency. This was when the US dollar pushed. US dollar yen rallied above that level. So we broke that high. I'm surprised today that we haven't had him wake up again, because today we've not only broken yesterday's high, we're almost on our way to ADR. So this US dollar yen is not stopping. I'm 1 short on it. My scaling plan on this is up to 150, and I don't want to take more than 3 positions. So where I am here, I'm planning basically ADR today to take a second, and then that 150 level, if we get to it, excuse me, is where I'll be taking my third. So I'm scaling in up to that level, and then obviously if we get back to that 150 level, the likelihood of that intervention move coming is much higher. I'm surprised we've had no peeps today on this, on the strength of this move. So this is obviously extended on the 4 hour, but it's been extended on the 4 hour all week, basically. So yeah, I mean, it's just parabolic, but it's not the fact that it's trending and it's parabolic and it's moving like this that's the important thing. It's this level, 1.5. Basically is where we get to the point where it's starting to become economical for the Japanese to trade. So this is why we get these intervention moves, yeah, where we get these huge, big spikes down. You can't even see it on my chart, look. but, well, you can just about. You can see the bottom of it there, look. Yeah. So looking at those moves, those intervention moves, that's what we're expecting. See where my bottom of my little block is, basically, yeah? So I will be scaling in on that. If it continues to rally. If it doesn't continue to rally, I've got an additional entry there and an additional entry there so that I can add on the move if I miss it and it happens while I'm asleep. Every intervention we've had in the past has happened during London and New York, I think. Might be wrong, but that was 9 a.m. UK. That one was 2 p.m. just before the New York Open. And that one was 10 a.m. UK, just after London, before New York. Yeah. So the moves tend to start not in the, well, they haven't started before, in the Asian session. So, but again, like I said, you won't notice it. You'll just suddenly have your dashboards go nuts. You'll be down here. So you've got to be ready. You've got to have the orders in place. Obviously, this is assuming it's going to happen, but these guys keep pushing like this. Not going to have a choice, are they? So that's where my entry is at the moment. But I will be getting into another one up here, waiting for an ADR. But if we don't get to ADR today, I'm not going to take another. I'm not going to get in just because it's pushed up today. I want to make sure I'm nicely spaced. And then obviously target, I'll adjust a little bit more. I think I've got TP on it. Oh, I haven't put TP on it yet. Stick it down there somewhere. I'll stick it down the bottom there. If it gets hit. So US dollar yen, big extension on the 4 hours, we know. New Zealand dollar Swiss, again, extended on the 4 hour still. We're embedded up here now and going into an accumulation. So it's the first kind of real pause we've had on this one. US dollar yen, there we go, there's your RSI alert on the hourly, just triggered there. So yeah, big extension up there. We're still holding up at these highs. Again, we're waiting for the Swiss franc to kick in. So I'm pretty much at average on that, looking for it to push back down into that propulsion as a best case scenario. By then we should have the 24 coming up underneath if it is going to continue and start to trend. I wouldn't expect it to with the Swiss franc, but you never know. So that's New Zealand dollar Swiss. Pound US dollar we know is massively extended. So this is holding up really well today. If you look at all the other pound pairs today, we've had a reversal alert off of yesterday's low on the pound New Zealand, and we've put in a new higher low off of previous resistance. So that's a beautiful market structure forming. We haven't managed to get another leg up yet, but it is on its way. The New Zealand dollar yen, little bit of a push. Pound yen, little bit of a push up. Pound Swiss pushing up. Pound CAD, that's not, because the Canadian dollar is on a massive rally at the moment, as we know. And the pound odd managed to make progress. Pound US dollar is rallying at the moment. Canadian dollar is rallying at the moment. We are holding our ground, which means that the pound is as strong as the US. All we are waiting for now is a little bit of US dollar weakness, and this will be able to get a kick in again. Yeah. So we haven't had a day where we've put in a bull candle yet. This is our open today. This is about as close as we've been to the open in the New York session for a while. Yeah. So if we can get that push up today, that is our first bullish candle on the daily. Just saying, we're waiting, aren't we, for something to give the market an indication that we maybe should be starting to get out of this. First thing they're going to be looking for is we haven't made a down day. Yeah, the pound has got more strength than the US dollar, and then it starts to roll. So good move. We are 4 hour RSI extended. Yeah, really embedded down there under that 20 level. But you see the wicks, look. Yeah. They've tried and failed. They've tried and failed. They're trying again. We've got 3 hours left on this candle. If this candle again closes with a wick to the downside, yeah, that's holding very, very nicely at the moment. So we will see. And this is with US dollar strength as well. That's the big difference today. We've got US dollar strength and we're holding. We haven't been able to do that before. So That's obviously very extended. Euro US dollar, big extension to the downside. Hourly RSI is extended. I'll be taking a first position on this one today. When we get the market reversal alert on M5, which will be there, I'll be getting a first entry on Euro US dollar long. So this is a nice extension to the downside on the hourly. We've been dropping very, very, very nicely on this. Again, looking for a pullback on this move here. Potentially the whole thing. Yeah, but looking for some kind of bounce. This is a beautiful support where we're at the moment. We've just missed ADR today. Not by much, but we have just missed it so far. Obviously, day's not over. We could get some more US dollar strength and rally this down a bit more. But this level here that we're at is a previous support. Yeah, so exactly where we are now is this support. So very, very nice area down here where we're potentially going to get some limit triggers. We haven't been down at this level for a while. The only thing that worries me about this level is it's very close to parity. So parity is 1. Oh no, we're miles away from parity actually. Sorry. Miles away. Don't have to worry about that. We're not heading for parity. Doubt it. It's not going to do it in one go anyway. I'd be very surprised if we can get down to there without some kind of pullback from this level. So we're looking for that. Just get some kind of pullback on the pound US dollar. I'm going to leave that parity line in there actually, just for future reference. So Euro US dollar very extended on the 4 hour, and it's also now extended on the hourly. So I'll be taking an entry on the H1 M5. Swiss yen extended to the downside based off the Swiss franc move. Don't hold up much hope for that to get back up there, to be honest. So yeah, I mean, hovering and flip-flopping around until potentially we get that US dollar intervention. CAD Swiss 4 hour RSI extension was lit up above the 75 level. We've been kind of flip-flopping between all three of these. Oh, wrong one. All three of these levels over the past couple of weeks, haven't we? It's just not letting up. Canadian dollar rallying at the moment with oil, US dollar rallying, which is helping the CAD on its way as well. So we are just about to hit ADR on the CAD Swiss. 47.1 on a 47. Oh, the spread. So as you can see, we're a spread away. This will probably hit, literally. This measures off of the ask, and it's the bid that is not triggered yet. So numbers are measured off the ask, but at the end of the day, nothing hits exact. It's hitting roughly its average daily range, isn't it? So there we go. That will trigger now. So CAD Swiss ADR. So we know that is big extension. Still pushing. So I'm not sure I'm going to get another on that today. 41. Yeah, I might do. Oh, that's a bit far, isn't it? 35. I'd kind of like to see this flip-flop around a bit up here and then make a new high so we can get a higher reversal alert. Get it a bit tighter, but yeah. Extended. CAD Swiss, so that's an ADR hit. So looking for a pullback off of that. And Aussie New Zealand. So Aussie New Zealand is a 4 hour RSI extension. It's just coming out of extension now. We had one big push down on that news. It's pulled all of that news back. So we're looking for a pullback on that move there. We've come out of this support very nicely. So good looking long opportunity. You've had your reversal alerts on this already today on the 15-minute and the 5-minute. 5-minute was all the way down there. So yeah, it's all underway. It's gone. So yeah, lots of RSI extensions. Very much the same as we've been looking at though for all week, isn't it? And for the last couple of weeks. So big extension still. Shouldn't have got out the short on the S&P. Never mind. Still in the Dow short. Still hasn't hit my target. My target was just about here. So I think that was a right decision taking that off there on that strength. So we are looking like we're pushing down a little bit more. Hedged on the NASDAQ. So we'll watch for a short play on this. So NASDAQ downside. We're looking at yesterday's low for an initial bounce. Failing that, ADR's all the way down there. There's no other support coming up on this. Same with the S&P. We've got that final support line on the S&P, which is here, 4261. So those are the 4-hourly lines we looked at. So this level here as a potential support. Then we've got these levels, which are that range, which is what we're in at the moment here. And then we had that other level at the top there. So failing this range, if this range doesn't hold and we don't find some buyers out of that range, we're looking at ADR today, which is that high. We've got another high just around 150 ADR as well. So there's some good levels coming up on that one. So watch yesterday's low. Failing that, it's ADR. So it could get a bounce off of that. It could get a bounce off of that. That's the S&P. The NASDAQ, we're at the monthly low. So again, watch yesterday's low. We got the bounce off the monthly, but see if it holds. Other than that, let's look out below on this one. There's really nothing. You got that low there. There's a double bottom there, which is draw that one on as well. Take these lines off from there. So there's a double bottom roughly there. And then you've got that high. So it's 150 ADR roughly to the downside. So if this low breaks, which is this monthly level and yesterday's low, there's a flush all the way down to 175 ADR. Nothing to stop it. And the Dow Jones, we've got yesterday's low, failing yesterday's low. Again, not a lot to stop it. Coming back down into this support. Here. Multiple support. That's 150 ADR as well. So lots of downside. As long as this US dollar keeps rallying, these indices will still be under pressure. So the first thing we'll probably find about that US dollar weakness is the indices will suddenly have a flick back up again. And if that happens, obviously there's a good chance that US dollar will start to reverse. So this is all being caused by the US dollar strength. So I will hold on to these today, short, and see where we get to. And then look for some TPs further down. So 5R is ADR. So I'm happy with that as a short target. Don't really want to get out of 3R. That's that bottom, but we'll see what happens with price down there. I'm not short on that, am I? So it doesn't matter about that. S&P, I'm out of that already. US dollar yen poking the bear. Yeah, very much so. Oh, look at that big sell we just came in there. Big pop through the lows there. That's that propulsion gap just getting filled. So all the buyers that have been holding this area up are now dead. Nothing to stop it until we get down to yesterday's low. So probably a little pullback on this, probably up into propulsion if we're going to continue down. Once the move on CAD Swiss starts, what do you think the chances of it going back to where it started from? That's going to depend on, I mean, going back to where it started from, I think you'll find very difficult. I mean, with everything like this, what's your time frame? There's a high probability that we will be back here at some point in the future, yes. But as for Euro US dollar, ADR, US dollar still pushing. That might actually be Euro weakness. We'll have a look at that in a sec. So yeah, I mean, at some point it probably will come back, but you've got resistance, previous resistance, which turned support of that accumulation first. You've got, if this is turning into a trend long, obviously if you look at the daily moving averages, we've broken back up into the green. Yeah, but we've done that before. Yeah, so this is either a lower high going in. We looked at this morning, didn't we? Yeah. So high, low, lower high, lower low, lower high. Yeah, this is either a trend continuation pullback, and they are very deep pullbacks at the moment, or we are switching trend and you're going to pull back and run. One of those two things is going to happen. I'm always erring on the side of caution, yeah, that we are going to reverse. And if we're going to reverse, what we're going to do, pull back. What we're going to pull back by, don't know. So look at it, and, you know, in general, a pullback on a trend will be somewhere between a 38 to a 61.8 retracement normally. Yeah. So 23.6, as we discussed earlier on oil, is a very shallow pullback in a trend, more of a flag break. Yeah, that's more of a flag break. A normal pullback in a trend, you will tend to get a decent pullback of around about a third to a half of the move. Yeah, the reason for that is because everybody that's scaled into this position is not made up of the same orders. Not orders, all orders are equal. In a bank, you've got commercial desks, you've got speculative desks, you've got hedge fund desks, hedging desks, pensions, all sorts of stuff. So anything that's on the commercial desk will be executed, and that's it. It's staying executed. Anything on the speculative desk will be executed and exited. Anything on the hedge fund desk will be one of the two, depending on how long that hedge needs to be held for, depending on what the other side of the hedge was, which depends on what other currencies are doing. So this is why you get a percentage pullback and not a full pullback most of the time, because some of those orders are designed and meant to be held for a long period of time. Think COT. Yeah, they're looking at 12-week plays. Yeah, we're in week 1, 2, 3, 4. Yeah, if this is a 12-week move, we're only 1 week in. Give it another couple of weeks for a pullback, and then give it another 6 weeks moving forward, and we'll be roughly at the end of the move that they've been speculating on. So you're looking for some pullback into this area, 24.72. Yeah, we pull back into the moving averages if we're going to trend. We don't know if we're going to trend. Yeah, if we knew the answer to the question that you've just asked, we would all make money all the time, wouldn't we? So you have to look at the possibilities. So if you are short on this like I am, and your average is there like I am, when we get down to here, I am out in a profit. If the 38 retracement is it, fine. So my decision here is, do I get out or do I hold? Do I go for the 50? If I'm going to do that and you get to the 50 and you don't see any signs of bullishness, do you hold to the 61.8? If you get to that and you don't see any signs of bullishness, you're going to hold it for the return to origin and assume that we're in that continuation down. You've got to make these decisions yourself. I don't know where it's going. I haven't got a clue. I don't even know if it's going to turn here. It could well wait until it gets there. And if it gets beyond there, God help us. No idea where it's going. This will be on the record books, won't it, as the biggest, strongest push ever in the CAD Swiss's history. Got to happen at some point. Records are there to be broken, aren't they? I was at Brands Hatch this weekend for drifting championships, and they had some pro stock car type things out there, and one of them broke the track record. 44 seconds they went round in. That record's been held since 2015. Yeah, no one has been able to beat that record for 8 years. Got broken this weekend while I was there. Is this the strongest push ever on CAD Swiss? Don't know. We'll find out probably next week, won't we? If it is, where's it going to stop? Don't know. It's never been done before. Same as a pandemic. Yeah, how far is the stock market going to fall when the pandemic hits? We've never had one before, so we don't know. But now we have history. We know roughly how far we go in a pandemic. But we've never had that before. It's unprecedented. So, where are we going to pull back to? Don't know. Never had a move this strong to pull back from. Can't tell. No one can tell. Down to the banks and institutions and what they need to execute. So, if only we knew. US dollar strength, anything I missed? No. US dollar strength is not stopping. Moment. We're in full-on fear mode. What usually happens when we get here? Everybody puts their money where? In the Swiss franc and the yen. What are we not getting at the moment? That. Yeah, I've been saying it for weeks. It sounds like a broken record, but this is not normal market conditions. This is something else. This is whatever's going on. It's just bizarre, but it is what it is. We've got to deal with it. So, oil rally was target the moon? No, oil rally target is $95. So going back here, the target was set at 107, which is up here somewhere at the top of the chart. That 107 target was revised after the accumulation back down to 95. So that's where we're headed, to 95, which is somewhere around here. But your decision is, are you jumping on board now or are you going to wait? Take that breakout, you're realistically only going to get $4 profit out of it, of a barrel, aren't you? So I still think there's more downside to this. I'm not sure, but that does look like a very convincing double bottom bounce, doesn't it? It's just there's no reason for it to bounce there. There's no reason for it to bounce there. There is a reason for it to bounce there, but it didn't get there. So it's one of those odd ones where it's just bounced randomly and gone. I said about this morning in the live room. I was waiting for the pullback. We didn't get it. We got a 23 pullback. That was all we got. And it's pretty accurate as well. So there's your 23. There's your 38. We pulled back to there. It's a flag break, basically. But yeah, don't know. But $95 a barrel. Basically, the institutions have targeted $95 a barrel. So the institutions that are long in this will be getting out there. So we know we're going to get a reaction there. It's whether or not the reaction is that or whether the reaction is that. And that reaction will depend on what OPEC has done with oil production limits when we get there. So oil inventories are coming out in 10 minutes, by the way. So you'll find out in 10 minutes what the market's going to make of it today, because we're going to get a move. I would say probably short it, but what's that line? That's last week's high. So we got last week's high, which we're going to find limits at as well. So if the oil inventories come out as negative, we'll get a pop up into that last week's high. So that'd be a good short. Play it back down there. So at 3:30, oil inventories every week on a Wednesday. Forecast is negative 0.7. So they're forecasting inventories to rise. So if we get anything worse than that, it should give it a pop. However, oil inventories are very hit and miss. Market doesn't tend to do necessarily what you would expect it to do on a supply and demand product, but which is kind of why I don't really position trade it, because it's not the sort of, it doesn't play by the rules. A little bit like gold, doesn't play by the rules. Down candle, 5 minute is pulsing up and down. Yeah. This is just, just market movement. Out the Dow. Flat on the Dow. That's a big move to the upside. Look again. This could be money just coming out of the stock market in anticipation of the oil move. Euro pound. Oh, sorry, we're going to look at euro US dollar, weren't we? Euro pounds just hit ADR. So the reason I was going to look at that euro US dollar was to see if it was US dollar strength or if it was euro weakness. It looks to me like this is euro weakness. So the euro is selling off, which will be dragging the Swiss franc down. So that CAD Swiss that's rallying, the US dollar is rallying at the moment, taking the CAD with it. The euro is dropping at the moment, taking the Swiss franc with it. So the CAD Swiss is obviously why it's hit ADR, because the Canadian dollar is rallying and the Swiss franc's dropping at the same time. So yeah, this is a big sell-off on the euro look. So we've got an ADR now on the euro US dollar to the pip. Look at that. Look at that for an advert for the ADR indicator. I shall screenshot that one. That's perfect, isn't it? You know, you're on when you see all these adverts on Facebook and everything, where it shows the perfect example. So hit ADR to the pip and given a reversal alert, really tight, and a push back up into propulsion and push back down. If I can get that as a screenshot, pretty much paints a picture of everything I do, doesn't it? Anyway, so yeah, that's hit. Euro pound has also hit to the downside. Again, euro pound, we've got a nice potential support resistance zone coming up, which is ADR. So we're accumulating 4 days sideways at the moment. So this sell-off that we're experiencing now on the euro is to do with the CPI figures tomorrow. So they're just escaping some positioning ahead of the CPI, or they've heard CPI is coming out as negative and they're starting to get short on the euro. One or the other. Who knows what they know? So yeah, a few ADRs today. Good moves. Is this still a short? Algo. Yeah, so it's just basically trading. So if it's flicking up and down a lot, that's just a large volume coming in. So when you get a candlestick doing that, that's just orders being executed. And typically it's a large order being executed. So when banks and institutions need to place a large order, they break it up into small parts and they execute small parts of the order multiple times. It's what we call an iceberg order. So what you find is they will place part of the order, it will pull back. They'll place the next part, they'll pull back. They'll place the next part, pull back. Place the next part, pull back. And it doesn't matter how much selling you plow into that move, they will buy everything you sell. So they just keeps going like that until that order is completed, and then it will stop. Yeah. So it's a large order being placed. You never know if that order is a speculative order or it's just a stock order being placed for a long-term investment. If it's a speculative order, you'll tend to find you'll go that way. If it's a large order, it's just been placed in the market and now you can carry on doing what the hell you like. It doesn't help you when you see them, which is why, you know, when people are looking at footprint charts, if you've got a large order in a footprint chart on futures, or you're using something like Bootcamp or Jigsaw, which shows the actual order levels, you don't know what that order is. Yeah. So, for example, on Jigsaw or Bootcamp, you can see the orders placed at the different price points. Yeah. So you'll see two big lines and you'll be priced here. You know for a fact it's going there or there. You don't know which, but you know it's going to go to one of them. When it gets there, you've no idea if it's going to bounce or if it's going to plow through it, because you don't know if that is a take profit or a stop order to get into the market. If it's a stop order to get into the market from a large participant, it will bounce. If it's a take profit order, they'll be getting out of that move, and the move that got there will continue. Yeah. So all this software that's like $2,000 and gives you the insights into the market, you can see the orders, there's footprint charts, there's this, that, and the other. Literally, there's support and resistance levels. And the odds of when you hit that support and resistance level, it bouncing is 50-50, because you've no idea how many orders are placed at that level. You can see there's a volume there, but what sort of volume is it? Buy, sell, TP, stop loss, enter, exit, iceberg order, fake order, what they call spoof order. Doesn't help you in any shape or form. Just another level on a chart. Getting ready for news release. Yeah, might be. So crude, we got in 3 minutes. So we'll watch oil. See what happens to the Dow as well. That pre-market break on the Dow was very nice today. The 5-minute ORB today, you only got 1 hour out of it. We're not getting a lot of movement at the moment. It's just very, very stretching. Getting ready, yeah, news release. So we'll watch that unfold in 2 minutes. Not even managed to get back up into that propulsion area today. Spreads widening on the oil. 20 seconds. Big spread. Huge spread just gone in on oil. Haven't got the number yet. There we go. 2.16 on a forecast of 0.9. So oil inventory is massively down. Should be a bullish move. There we go. So 2.169 negative barrels. So obviously this is to do with a cap on production. Production is down, stocks are down, demand is the same, supply restricted, price goes up. Typically, that is what you would expect on a supply and demand instrument. However, oil isn't always reacting in the same way. So we are up at ADR as well on oil. So we might find it a little bit difficult to get a push because we've done an awful lot of volume in buying already today. So we'll see. Indices coming down again. They do look like they want to sell off again, don't they? I'm going to exit my longs on the NAS up there. See if we can get another leg down. We're so close. That's come off that monthly level absolutely to the pip, look. So this blue line here is last month's low. Literally to the pip. Pretty much the same as the bounce we got there. So could well just be a bounce and drop. I'm looking for it to come down and test yesterday's low. Adjust my target on that. So I'm going to take one off at yesterday's low and then the second one if we can get a run out the bottom. If it happens. Everything looks like it's selling off though at the moment. Need the NAS to follow suit. If not, I will stop out on this up there. Not a good day today. Losses all round pretty much. That was my fault for mucking that up. But if we can get that run down, that'll give me a break even on the day, which is good. So yeah, oil stuck, look. There's no volume left. really for longs. We're extended above ADR, aren't we? So I'm going to find it hard to get higher. Right, I'll leave it there today. There's a few ADRs there, and obviously there's quite a few RSI extensions. Somebody just pointed out in Telegram just something I said the other day. Let me just take that fib off for a minute. With this CAD Swiss, I mean, I wouldn't exactly call this a rally, a big push to the upside, but quite often, if you look at big moves, I can't really see it there so much. But if you look at big, strong pushes, when you get a big, strong push, quite often what you get is a big, strong move before the reversal comes in. So it's kind of like, if you like, the last hurrah. It's like the last big batch of sellers, and then you just run out. So you run everybody over. There's literally nobody left, and then it springs back very, very quickly. So that's where you get the hammer, the shooting star, the bearish engulfing, the bullish engulfing. Yeah. So you get these big, strong moves at the end of a trend, which immediately reverse. Yeah. So what we're looking for with these things that are pushing really, really hard is potentially a big, strong push in one direction, and then they will finish. That'll be it. So you quite often will end in an ADR hit, and it's like, right, that's it. There's just nothing left. And then it will just turn tail. And it's like a plane running out of fuel at 30,000 feet. It's literally straight down. So we're looking for a big push. So if we did get that push up to 150 ADR today, anywhere near that high, and then we see a big sell-off, which is kind of what we were hoping was coming on this CAD Swiss yesterday. A big move like that, yeah, you can see on this chart. These obviously didn't happen, but this is the sort of thing you're looking for. A big, strong flurry, but instead of that 50% retracement, which is a continuation move, we're looking for that big, strong flurry and then a big, strong push back in the opposite direction, which is basically those buyers just run out completely. Sellers take control and off we go. Yeah, that's where you're going to get your alert. Usually a very quick in, out, done alert, off we trot. So if we do get a continuation push on this one today, same with the pound US dollar, you get that continuation push down, or either, we just get rejection after rejection after rejection. That's the other way it stops, where they just try, give up, go the other way. Yeah. So we'll see, but you'll see it if it happens. But fingers crossed, they're all starting to peter out now, starting to lose a little bit of that momentum. This Euro New Zealand coming down hard as well. All the Euro pairs having a big sell-off today ahead of the CPI figure tomorrow. Nice support level on the Euro US dollar we're at. Yeah, so watch this. Extended on the 4 hour at support. As if we get that CPI figure coming out as positive for the euro, for Germany and Spain tomorrow, we'll get a good rally on that euro. But they're selling off into it at the moment. So, but nothing overnight to worry about tonight. We've got the Aussie retail, but that's not really going to do a lot. So, all right, I'll leave it there today. Anything you need, let me know. I'll be back tomorrow at same time, 7:50 and 2:20. Just going to watch this short. See if I can get some money out of this short back down into these lows. Otherwise, I should be watching this high to get out. Bit of a crappy session today, but very much like the DAX today. Very, very hard to make money when nothing's moving in any direction. Or it's moving too fast in one direction and not doing anything else. Franco dollar signs. Made money. Good job. Right, so yeah, see you tomorrow morning, 7:50, same time for Frankfurt. If not, 2:20 tomorrow afternoon for the New York session. And anything else you need, I'll be in Telegram. And yeah, see you tomorrow, and we'll see how we get on. Have a good one.